Well, in another sign of impending deflation, yes, I said it, deflation, not disinflation, but deflation, we are seeing US retailers' unusual request to suppliers to stop sending new products. Okay, so if you were paying attention at all during 2020 and 2021, the big story was supply chain issues. Nobody can get enough stuff. The shipping containers are, months out and they've skyrocketed in price and we just can't get the stuff we need. Demand was skyrocketing. There just wasn't enough stuff anywhere. And it took a long time for production to ramp up because there were other bottlenecks that prevented production from ramping up. Well, that is the exact opposite of what is happening right now. We are seeing retailers have so much extra stuff in their warehouses that they're telling their suppliers to stop sending them products. And this is the kicker, even if those items are selling well. This is absolutely the opposite case that we had from the last couple of years. It is turning on a dime. And this is entirely expected. This is not something that anybody should be surprised by. This is the classic boom bust cycle. You have credit that expands the money supply. That new money supply starts to bid up prices. As prices start to get bid up, you have investment, misallocation of resources, malinvestments made in areas because they think those areas are booming, when in fact they're not booming. They're just built on an artificial expansion of the money supply. Eventually, either the debt gets paid off or the money supply continues to expand and hyperinflates. Usually the money supply, the credit starts to get paid off, which starts to bring down the money supply again, which means that prices stop increasing. And then suddenly you have an increase in production, you have all this malinvestment, you have projects that can't be taken to completion as stuff starts to crash down, and all the extra inventory that all of the stores, all the businesses started to build up and increase production and store in their warehouses, suddenly nobody can afford that stuff anymore. So it starts to sit there and starts to go on sale. Classic boom bust cycle built on easy credit. Now, it's very possible this spike in inventory results in a collapse in prices, collapse in profit margins, which would result in a crash in the stock market. So if you'd like to be able to hedge your overall portfolio from being exposed to crashes, whether we get inflation, deflation, something in between, or something else, get my portfolio allocation mastery course linked in the description below. 50% off for the holidays right now. Now, it's key to note the comparisons here, that the average amount of inventory, it was up 26% in the third quarter of this year, and that is versus pre-pandemic levels in 2019. So it's up 26%, not compared to last year or to 2020, but to 2019. Because obviously you would expect a big increase in inventory versus like 2020, right? Because that was when everything was sold out everywhere. So you expect that, but big increase over 2019. That shows you the boom bust cycle I'm talking about here, where production ramped up because and suppliers started to try and buy more and more and stack up their inventory because they thought this demand was permanent, because the demand came from this artificial boost in the money supply. People started spending like crazy because they thought they had a lot more money, and really they didn't. They just had more units of money with less purchasing power than they had before. So they burned through all their savings, and now the US savings rate is way lower than it's been for years, and now people can't afford all this stuff that's now sitting in warehouses. It's also important to note these figures are unadjusted for inflation because they're dollar figures and they haven't been adjusted for inflation, which means that 26% is probably a little bit of an overstatement somewhat, but at the very least, the amount of inventory is higher than it was in 2019. It is so bad that some major retailers are saying, hey, you could give it to me for free, I cannot take it. They literally just don't have the room for it. Retailers have been even ordering less, but they still have high inventory levels. So they've been cutting down on how much new stuff they've been ordering to backfill their inventory. And sales have slowed down so much that it's just not helping. Add on to that, inflation and higher interest rates have been hurting retailers as storage cost has gone up as there's been more demand for warehouse space. Now, one result of this for anybody who is somewhat financially responsible is that, hey, there's a bunch of deals coming very soon, if not already, because all this inventory, eventually, there's still higher prices for everything like energy and real estate and wages and things like that. And so these companies are going to be in a position here where they're going to say, hey, we can keep all this inventory and keep on trying to charge a higher prices for it so that we can still squeeze a profit out of it. Or if it just doesn't sell at those higher prices, we're just going to have to accept that we're going to take a loss on this, which means it's very possible, at least right now, maybe a few months into the future, we start to see massive sales on many consumer goods. Good news for anybody who has savings and low debt. Bad news for anybody who's been buying a bunch of consumer goods for the last couple of years and now can't afford to buy anything even though it's on sale, which, by the way it works, that's going to be most people. That's the reason why none of this stuff is selling, because nobody can afford it because they already bought it all when it was expensive. And as one final result, it is also going to be making returns maybe start costing money at some retailers. Because if you don't have enough space to even keep the stuff that you're trying to sell, you're definitely not going to want to take back the other stuff that you've already sold, especially as your profit margins are getting squeezed to the point where maybe you have to start taking losses. And so this could be something that retailers start doing very soon here. You go to take something back and they say, okay, that'll cost you some money. And so that'll severely limit the amount of people returning things, but it'll also severely impact the trust that many people have in their favorite retailers now. If you go and buy something and let's say it breaks or you're not completely satisfied, you go to take it back and they say that'll cost you, $5 to return this. It's like, well, you're going to take a loss either way, either keep the item or, lose $5 on it. That could severely harm some relationships and could quite frankly even result in starting the process of some of these businesses just folding. Which, by the way, is one more hallmark of a classic boom bust cycle, is that in the end, a lot of the areas that had a lot of malinvestment, misallocation of resources, but also there's second and third order effects. There's people that have consequences that affect them that were not directly a result of anything that they did that get taken out in the chaos. So bankruptcy and businesses closing down is part of the cycle that has started as a result of artificially easy credit conditions. And then as one final note, I have been saying for a while now that I expect that within the next couple of months, we are going to see the inflation numbers come crashing back down, and this will do nothing but help my prediction come true. As prices for consumer goods get put on discount, get put on sale, we start to see retailers folding left and right, putting everything on clearance. This is definitely going to be something that pushes prices down, and the CPI will reflect that. As always, really appreciate you guys. Thank you so much for watching. Have a great day.